Greetings fellow charties, it's Ed here at the Trading Lab, where we're now dispensing with the cutesy introductions to get you right to the reason you clicked on the video in the first place. Today we're putting 5 MACD strategies to the test, pitting one against another to find the most profitable and straightforward strategy you can use as the basis for your own system. I'll give you the full detail and entry rules in a moment, but here's an overview of the 5 we're testing today. First up, the highest ranking strategy on our channel so far, it's the one we tested last week, the higher time frame triple supertrend strategy using a MACD cross on your trading time frame as the signal. I'll give nicknames to each strategy today to help you keep them straight, and we'll refer to this one as Supertrend. This is our defending champion. Remember, all the settings and entry criteria will follow in a moment. The second is a simple trend following strategy that uses just a single time frame with a 200 EMA as our trend indicator and the MACD cross as the signal. This contender we'll call Classic. The third is a bit of a convoluted one that attempts to make up for the lag inherent in a MACD signal by using a separate standalone oscillator. This strategy uses the same higher time frame triple supertrend again, with the MACD used this time as a pullback indicator and the Cipher B as a signal generator. Full details on this in a second, but for now, let's name this contestant Complex. The fourth is a bit of a mixture and a little simpler. It's just like the last one, but instead of the higher time frame triple supertrend, we just use the 200 EMA as a trend indicator on your regular trading time frame, the MACD line as a pullback indicator, and the Cipher B oscillator as the entry signal. We'll call this challenger Composite. And our final contender is a variation on the single time frame Classic, and it uses the 200 EMA along with a 20 EMA to form a cloud to confirm the trend, and a standard MACD crossover as the signal. For simplicity, we'll call this one Cloud. If you're new to the channel, we backtest strategies manually, finding 200 signals over 6 random markets and 6 random time frames. We test them all the way a real person might trade, with stop entry orders, break-even stop losses, and by closing trades that don't perform. If you've watched enough of these YouTube strategy testing videos, you're probably frustrated by this sort of thing, where they let a trade run and run forever, and when it finally passes the take profit, they say, "Look, another winner." Real people don't trade like that. Robots trade like that. And just a guess, I'd say most of you aren't robots, don't use robots, and just trade manually. Professional traders know that if a trading signal doesn't perform in 20 or 30 bars, usually much less than that, it's not a good trading signal. At some point, an entry like that is no better than random. So here, we cut short trades that don't reach the take profit or hit the stop loss in 40 bars. It probably should be fewer than that, but 40 is where we started on the channel, and so we'll stay consistent. The other rules that we use are on the screen now. Feel free to pause and read them. Now back to the strategies. If you've ended up on this video, I'm going to assume that you know how to add indicators and change settings in TradingView, so we won't waste time. If you don't, that information is easy to find, and you can always come back to this video later. For now, let's take a closer look at the contenders one by one. First, our reigning champion, Supertrend. I gave a complete description in the last video. The link should be here in the upper right hand corner where you can see all the fine details, but basically we use 3 super trends on a higher time frame chart, each with different settings listed here on the screen to determine the trend direction. Then we use a MACD cross on the trading time frame as the signal. For a long, the MACD cross should occur in the lower half of the indicator, and for a short, the cross needs to happen in the upper half. The entry criteria are also here on the screen. Pause if you need to, or refer to the original video. Second, the one we're calling Classic uses a single time frame with a 200 period exponential moving average to determine the trend, and the same MACD cross criteria to signal the entry. Details on the screen. This is a fairly common strategy seen around the internet, but the testing outcomes vary greatly depending on who's doing the testing and their arbitrary rules. But here, we're testing every one of these strategies the exact same way, and it's the same way we test all the strategies on the channel. For the one we call Complex, we're back to the same higher time frame super trends on the Forex chart for trend direction, but we use the MACD for pullback identification, and then the Cipher B oscillator as the signal generator. Settings for Cipher B and Supertrend are on the screen now. In this case, we take the Cipher B signal in the direction of the supertrend when the MACD line, that's just the blue line, is simply below the zero line for longs and above the zero line for shorts. We're not using the cross. Since in this strategy we only use the MACD line, it might be easier to turn off both the histogram histogram and the slow line and just leave the MACD and zero lines, but that's really up to you. Now the composite. It's the same as complex, but instead of triple super trends on the Forex chart, we simply use the trading time frame 200 EMA for the direction, using the MACD line position to confirm a proper pullback and the Cipher B dot for a signal. Settings and entry criteria on the screen as usual. Finally, the cloud. You could just use a 200 EMA and a 20 EMA, but I found that the Trade Pro rejection zone indicator makes this one easier to see. This is basically the same strategy as classic, using the MACD cross as the signal, but you can only take the signal if the candle closes beyond the 20 EMA and does not touch the 200 EMA at the same time. Pause if you need to read the details. In order to be fair, we're using the same randomized markets and timeframes generated by the randomizer in our last video for all the tests. That is, each of these strategies was tested on the exact same data so that they can be compared apples to apples. This was originally generated in the last video from 32 different markets and 12 different timeframes. All right, here we go, back shortly. While I'm running the backtest, I should mention that there are links in the description box below for both Apex Trader Funding if you trade futures and Funded Trading Plus if you trade Forex. Both give you incredible discounts. So use the links below, but if you see an even better deal on the site, definitely take it. There's also a TradingView link below that'll get you $15 off any subscription. Now the results. Coming in 5th place, the Cloud, with just a 9% return over each 100 trades and a staggering 142 candles between the signals. That's a long time to wait for a trade, especially when it's not particularly profitable. In 4th comes Composite, also with a 9% return. But in contrast, this one did have the most signals of any of the strategies at only 52 candles between each, but it also had the biggest drawdown of the lot. The bronze medal, 3rd place, goes to Supertrend, last week's big winner, with a quite respectable 22% return, a low drawdown, and a good number of signals, but we've actually done better with the two others. Which will it be? The dual time frame 3 indicator complex strategy or the super simple classic MACD strategy? The winner is Classic, and it's kind of a knockout with an incredible nearly 32% gain on the account over each 100 trades, while Complex has a still not too shabby 24%. Classic's drawdown was also remarkably low at 7%, although the trades are not quite as frequent. Still though, according to my testing, and remember this is limited to only 200 signals, you would only need about 4 trades per day on the average to earn 1 R, or the amount that you risk on your typical trade. This classic strategy seems like a great starting point for anyone developing their own system, to maybe try adding other indicators or price action to increase the win rate or the percent return even further. The equity curve is also quite telling. Classic is here in green, with a fairly smooth rise up and to the right, with very little drawdown and then rising far above the rest. You can also see the value of testing 200 signals over just 100, like most other manual backtesting channels, since Complex and Classic were still neck and neck around that time. And here they are on our spreadsheet. I've used their nicknames today, but I'll change them back to more descriptive names in future videos. And you can see that Classic MACD really is head and shoulders above all the rest so far. But we'll keep testing different strategies in our continued, certainly misguided attempt to try to find a universal trading strategy that works in all markets and all timeframes. Though it does seem we've come pretty close today, but stay tuned. So that's it for another week, but we also want to test your favorite strategies, so comment below or shoot me an email. The address is on the screen. I really hate it when creators say, be sure to smash the like button and subscribe. So if you agree, carefully depress the thumbs up button and consider subscribing. We test another strategy every week, and I'd really love it if you came along on the journey with us. I sincerely appreciate you all watching and wish you a great trading week with perfect entries and top tick exits.